champ is here. That's right. 3, 2, 1. Let's go. I gave me a talent, so let me flaunt the gift.
Broadcasting live from the Property Cashflow Studios, this is the Property Cashflow Experience, the world's leading podcast on building cash flow in property, real estate, fast. Hosted by the Cashflow King and your favorite mentor, the possibility of living the life you desire starts here.
Damn. Let's get ready to rumble!
Hi, and welcome to the first ever Property Cashflow podcast. I'm your host, Mr. Neil McCoy-Ward, and I'm the founder of the Property Cashflow Academy. And here's my co-host, Mr. Dwayne Squires.
Thanks for the introduction, Neil. So, as Neil said, I'm the co-host, Dwayne Squires, and I'm the managing director of Forward Thinking. So, the session today, we're just going to keep it very light overview of the various strategies that we implement in our business right now.
Yeah, we're just going to keep this simple. We wanted to give you an introduction to who we are, and more importantly, what you're going to be getting on this podcast. That's the most important thing. There's so many podcasts out there. What makes ours different? So I'm just going to touch on that real quickly, and I'm going to give you a bit of an intro into us and the strategies and what we do as property investors. So what makes us quite different then is that we focus in the Property Cashflow Academy purely on cash flow. So there's so many people that are focused on development, commercial, title splitting, resi to commercial, commercial to resi. You know, there's like a million strategies out there. We don't really focus on like a million strategies. We focus on 3 strategies, and that's it. And we're focused on cash flow. Like, we're interested in buy to let. We've built up portfolios and the like over the years, sold my portfolio. You know, there's all these things I could talk about, but really what we're focusing on is 3 strategies. They are rent to rent, serviced accommodation, and deal sourcing and packaging, which also incorporates lease options. So lease options is a really fast way to actually develop your own property portfolio. So let me just talk on that real quick as to why I think cash flow is the most important thing. What I see all the time, and you probably see it as well, Dwayne, is all these property trainers, and they're like, oh, buy this, flip this, develop this, and the like. And they're taking people who are completely new to property, and they're saying, hey, invest your 50,000 or your 100,000, or even if you got, let's say, 20,000 or something into this house and then renovate it and flip it and all this sort of thing. Yeah, that's great. But the majority of people, they're not in that position where they're looking to build massive capital right now, right? Most of them, they're focused on cash flow, right? They want to, replace their income, or there'll be people watching who are maybe solicitors and doctors and people like that. But that's not going to be the majority. That's going to be like 5 to 10%. The majority of people are going to be in jobs, like full-time jobs, and maybe that's you watching and you actually, or listening online, and you actually want to break out of that job, and you want to create a full-time income from property this year. Now, it might sound like a pipe dream, but actually that's quite achievable, and we teach that all the time, how to actually achieve this within a very short space of time. Some of our clients have got financially free within as little as 2 months. And actually, let me just give you an example. A guy started mentoring with me, and he's only had 2 sessions, so he's been mentoring for 2 months, and he just took on his first licensed HMO, which is a rent-to-rent deal. It's got a cash flow of £1,300 per month. That's all he needed to replace his job that he didn't like. So I'm not saying that's typical. He was very quick to do it. He's just the first name that comes to the top of my head because I just spoke to him about half an hour ago. But that's just an example. Dwayne, do you want to add anything?
Yeah, I think cash flow is really important. Really important. I think you touched on the fact that the podcast is for the individual that's just looking to replace their income. But I think across the board, cash flow is very important, as we know. So you look at large companies down to the smallest company. And when we translate that, that could be a new investor to an experienced investor. It should all be going back to cash flow. So for example, I just wrote down a few things. So recent news in 2019, WeWork. Yeah. We all know about WeWork, Serviced Accommodation. They were valued at 50 billion, I think, earlier this year. And now their value has dropped to like 9 billion. And the whole model of WeWork is cash flow. They didn't have enough cash flow to keep running their operations.
Yeah.
Another example is National Trust. So you see all these sites around the UK, Kedleston Hall, which is near me in Derby, to however far and wide in the UK. All driven by the fact that we've got these national trust houses that are wealthy, came from large wealthy families.
Yeah.
But when it came to the tax bill, there wasn't enough coffers in their bank account to afford the tax charges. So the point I'm making here is cash flow is needed no matter what your income is. It could be you could be a doctor,
could be a bin man.
Yeah, exactly.
It doesn't matter.
You just need to replace your income.
Yeah, and by the way, I say that a bin man, not to be like rude or anything, but because one of my clients was a bin man, and he's now financially free. He works in property full time. He's got some really good deals actually.
I think just cash flow. The whole intent of this podcast, like you said, is let's create a strong foundation, and that foundation is always going to be underrooted by good cash flow, solid cash flow, and then let the equity, quote unquote, the wealth build up over time, but let it be underlined by strong cash flow.
Yeah, because there's different ways you can actually do this. You can, focus is for you. You can look at this podcast as a way to see it as, right, I'm going to buy my own properties, but I actually want to learn about cash flow first. Because too many people, what they're doing is they're focusing on buying, and then they're saying, well, let me try and get equity. It's the wrong approach. You want to buy for cash flow first. So if you're going to buy a typical 2 up, 2 down property, the odds are of you getting very strong cash flow from that, if you're just going to rent it as a buy-to-let, are very, very small. It's very unlikely that you're going to make a lot of cash flow, and you've tied up tens of thousands of pounds. However, with the sort of strategies we're teaching here, you could put that same, let's say you put £10,000 in. That would get you 3 rent-to-rent properties, and even if you took on the worst rent-to-rent properties and they were making £500 profit a month, that's £1,500 in cash flow compared to your buy-to-let that might make you £300, or if you really got good on a property like that, £500. But I couldn't see you making 500 cash flow on a little up north property like that.
Brilliant. So what do we want to touch upon this session? I know we talked about the value of cash flow, and that's going to be the underlying factor throughout all our sessions and whoever we get on the podcast. But in this first session, how do we want to approach it? I
think we should do an intro now. So I'll tell you a little bit about myself, and then Dwayne can tell you a little bit about himself. So you know who we are as people, what we stand for, and what you can expect from us. So I do think Dwayne and I are very different in our approach to a lot of other property trainers and educators and the like. And that's because if you look at the majority of educators out there, their business model is that of a training company. Okay? So this is an important distinction here. Their model is being a training company. So they set up in order to train you in property. Now, that's fine, but it's the same example of a university lecturer who has never actually, let's say, I remember when I was at the entrepreneur in residence at Coventry University, and I had all these people coming to see me, students who were doing the entrepreneurship course. And they were saying, well, my lecturer told me I should do X, Y, Z. And I said, what? Where on earth did that come from? That is really bizarre. That works in theory, but not in the real world. And I would speak to the lecturer and they'd say, oh, well, I actually haven't got my own business, but I went through and I got my degree, and then I then got my PhD and I did this and that. And now I'm a lecturer. And it's like, okay, I get it.
And it's funny, by you giving that example, have you ever heard of the analogy where it says to be an expert or a lecturer, all you need to do is read one chapter ahead of the students?
Yeah,
so
yeah,
it kind of brings that to mind.
Yeah. And that's one of the issues, because what I see is a lot of the people in this industry, they're educating, but they haven't got the backing. And that's an issue. So I could quite easily teach you about all sorts of things from buy-to-let to commercial to development. However, it's not my bread and butter day in, day out. It's not what I do day in, day out, and I haven't done it for decades. So I don't teach it. However, I did start investing in property in 2005. So that is now 15 years of experience, right? So that's how long I've been doing this. And I bought my first property 2005. It was a bit of a lesson, hard knocks, to say the least, on that deal. And then I released equity. I bought my next property. Then Mortgage Express came to the rescue with their 100% mortgages. That was about 2007, 2008. 2008 time, I think it was. And I just went crazy. And then we had the crash. So I stuck with this giant portfolio of 100% mortgages. It was just an absolute nightmare. But that's how I started out. And then what I realized was, actually, why am I focusing on ownership? I've just lost all of this equity in my portfolio. I've just lost it all overnight. I was invested in Florida as well. I was invested in the Isle de Margarita, just off the coast of Venezuela in the Caribbean. I had all these investments and I was just underwater so quickly. Whereas other people that I noticed, the people who were actually successful through the recession, they were doing lease options. They had cash flowing strategies like rent to rent and things like that, which I didn't really understand at the time, and serviced accommodation. Didn't understand any of this. But as we came out of the recession, this is when I actually got into these strategies. And I started with my rent to rent portfolio in 2013. And that's really why I built up massive cash flow in a very, very short period of time. And I was like, why am I spending all my money trying to buy properties when I can just get cash flow from properties that I don't own? I just manage them on behalf of landlords. And that was a big breakthrough moment for me. And then, of course, I went into serviced accommodation, which is just another step up from rent to rent. Again, managing properties from landlords that I don't even own, and making huge sums of money, much more than rent to rent, every single month. And then, of course, it was lease options, which are not really talked about at the moment, but I personally feel that we're coming into a time now of confusion, especially in the property market. The only people that are telling you with confidence that the market is about to boom and it's going up and up and up are property trainers trying to sell you training courses. If you look at what all the experts like the IMF, the International Monetary Fund, the EU, European Union, Nobel Prize winning economists who are studying the UK market, they're all saying the same thing. And that is that we're not set for this big boom. We're probably set for stagnation for a long time to come at the moment. Or if anything else, we're probably going to drop. So the IMF and the EU, their forecasts are saying that we could experience a drop as low as 40%, which I personally feel is a little bit harsh. I don't honestly think we're going to see a 40% drop, even if we do have a recession in the coming years. I just think it's too steep a drop. However, we do have quantitative easing. We've got over £1 trillion of extra money that was created out of thin air by the Bank of England, via the government. So there is a lot of other stuff that's going on in the marketplace which could cause some instability. But the fact is, even these Nobel Prize winning economists don't know what's going to happen in the economy, don't know what's going to happen to the property market. So I'm hedging my bets. I'm saying, I could go out and I could just buy loads of buy-to-let properties and just grow the portfolio and keep doing that. But why, when I can make all this cash flow from rent to rent, serviced accommodation, and selling deals? Why would I, take all these risks when I can do that? Whereas if there isn't a recession coming up soon, a housing market decline, I'm going to be jumping on it straight away with lease option contracts, taking on those properties for nothing.
Yeah, I think it's right what you're saying. I think what I'm getting from what you're saying, and one thing I always support is there's uncertainty, and we haven't got we can't read the future. We haven't got a crystal ball that says, okay, in such a year, here's where it's going. But like what we said hearts on earlier is cash flow. And it doesn't take away from the fact you can still do vanilla buy-to-lets or HMOs and purchase them outright, which is solid for building wealth over long term.
Yes, definitely.
But purchase it, build on strong foundations. Buy properties that are good, solid properties, will give you strong cash flow. If they appreciate over the future, which we know over the long term it will be, over the short and medium term, there's always uncertainty. Yeah. But make sure you've got a portfolio that's got strong cash flow. You've got good fundamentals that support you, and you should, in the long term, always come out on top. However, have it backed up by good cash flow in properties and strategies.
Yes, yeah. So I think we're to summarize this, what we're saying is we're not anti-buying, which a lot of people think we are. Yeah. We're actually not. We're just pro cash flow first over equity. Yeah. And I think that's the most important thing, because I think that's what most people want.
Exactly. Yeah. Exactly. And, what we're effectively echoing is make sure you build wealth supported by good income.
Yeah, definitely.
Because I don't know. So just to add, I know when I started, it was actually during the property crisis. So before going to university, I worked in a city for a year, and I remember there was all these traders, and if you can ever imagine Wall Street or traders on the floor, effing blinding, and swearing at the screen because literally overnight markets are dropping left, right, and centre.
Yeah.
Lehman Brothers, News and Lehman Brothers, people either making money or they're losing money. They're driving these large Mercedes, BMWs, and they're thinking, and they've got a massive mortgage, and they're thinking, oh my gosh, I'm losing my hat here. So I was, in terms of being aware of property and starting to get in that, it started to come to mind when I was like 18, 19.
Yeah.
But I already only got started, and that was like 2008, 2009. But I already got started 2011, 2012. But during that time, I looked around, and one of the key things you could always bet on, and a few investors that I spoke to at that time was, well, yeah, the market's crashed. Yeah, the property prices might have decreased at that time by an average of 19%. In Northeast, it went down as worse as like 40%, even 50% in certain areas.
Yeah.
But investors kept on, or the ones that were successful kept on saying to me, yeah, I'm not too worried because I built a portfolio based upon fundamentally good income every year.
Exactly.
And that's probably where you can struggle when you invest in London, where I think average house price, even with Brexit and the knock-on effect it's had on slight price decrease in London, is like £400,000. And although you get in terms of a gross income that's higher compared to outside the UK, the yield is much lower. And then yet you're contemplating with also high interest rates relative.
Yeah.
So then you raise the question that London down south, whether you're actually breaking even at the end of the month after you factor in your mortgage cost, your maintenance, your property management, etc.
Yeah.
Now, if you've got a strong job that is going to be paying towards your property portfolio, all very well. However, what about if you lose that job?
Yeah.
What about if something goes wrong? You then that portfolio that you're building for your retirement or to one day replace your income literally looks like, rather than being now an asset, it's now a liability.
Yeah.
Isn't it?
And it's funny because I actually said about 3 years ago that London prices were going to go down in the next 12 months.
Yeah.
And I remember, I don't know if you remember this, but I started sweating. After 12 months, they had still gone up. They'd gone up. And I said, how is this possible? Because the PE ratio, which is the price per earnings ratio, was like 12 or more. And a bubble is 7.5 or more. I mean, this is simple economics. A bubble in terms of PE ratio, 7.5 or above. So that's how people, listening at home can actually find out what their area is like. I mean, there's a lot of variables. You can't just take it as that 7.5, as it is. But if you look historically at house prices, you look at about 7.5 and it's typically been a bubble historically. So London was going up and up and up. And I said, no, it will never pass 12.5. It's just not possible. And it went higher. And I went, oh my goodness. And people were going, you said this, you said that. And I thought, I don't get it. I've studied all the economics. I've studied all the models. I don't get why it's gone up. And then it hit 13. And I was pulling my hair out because, we're 18 months in now. And I went, oh my goodness, what on earth? We're now at 13. I was about to just give in because I thought I'm way off. My predictions have always been good, but this one's off.
Yeah.
And then we got to about 13.2 and you just saw prices just plummeted. And I was like, right. So actually I was accurate, but I was just about 6 to 9 months off. And the PE ratio was a lot higher. So I saw this coming. And now, what I predicted was that the Southeast would be hit next because it's a ripple effect. It's like a wave. It gets lesser the further it goes out. And then what happened? You remember my mentoring clients? I said to them, you need to sell your property right now because it is at the absolute peak. It's not going up any higher. Look at the other prices. I promise you it's at the peak. They ummed and ahed, and then they said, yeah, okay. And they sold the property. Yeah. And then they said within a few months, we've got a video of them saying this, within a few months, the property value after they sold it went down by about 20,000 just on their street. So this isn't, rocket science, but you've got to know economics and you've got to understand a lot of these sort of things, which we've been studying for a long time. So I'll just to finish then, and then we'll talk about how Dwayne and I came to know each other. So I founded the Property Cashflow Academy, and I also founded the Forward Thinking Group. So you might have come across the Forward Thinking Group before. It's a group of property-based companies here in the UK. We do all sorts of things from rent to rent. So we've got the lettings business. We have the student homes. We have the sourcing. So that's one thing that we predominantly focus on is the property sourcing. We source a lot of properties from rent to rents, serviced accommodation, lease options, below market value, or even if you are just looking to source a property investment and you want a good return on that, you reach out to us and we'll add you to our database and we can source for you. So obviously we charge a fee for this service, but if it's something that you're interested in, we offer all these sort of services. We offer the training and the like. So actually, I won't say how Dwayne and I came to know each other. I'll pass over to you and you can talk about that.
Yeah, so I'm sure people want to get to the juicy bits of content and value. So I'll keep it short and snappy. But ultimately, I met Neil, was it like 4 years ago, I think, or 5 years ago? And that was on a rent-to-rent training course. And that time, that was me adding another tool to my toolkit in terms of how to invest in property and generating cash flow. Because at the time, I was focusing just on property sourcing and buying a few deals here and there where possible. And then fast forward to last year, 2018, we had some good discussions, and then we agreed that it could be beneficial for us both to for me to join the company, and to buy in as an investor, and then become the managing director of the Forward Thinking lettings, as well as our property, as well as our serviced accommodation business too. Yeah.
So that's how we came to know each other. It's been a good partnership so far. Everything's growing.
Fingers crossed. Yeah.
Fingers crossed. But it's like, we're not going to sit here and tell you that we're perfect in every single way. That one of the reasons for doing the podcast and the channel and all this thing is that we're going to tell you about the lessons that we learn as we go. So it's a shame we didn't start this 4 or 5 years ago, because we could have told you a ton of mistakes back then. But we're always making mistakes. We're always learning every single day.
Yeah.
Every day is a lesson. We learn.
I think that's valuable. So we learn loads of things from all the errors and mistakes we make, and that's, as you said, accumulated over years and years.
Yeah.
But hopefully, by listening to this podcast, you'll learn from that. What do they say? You can either learn from your mistakes, or you can learn from the wisdom of others and avoid those mistakes.
Yeah. So I think that's about it for this podcast. We've covered the sort of foundation, the fundamentals of what you're going to be expecting from Dwayne and I as we go through, as well as the interviewees that we bring on the show. So I hope you enjoyed it. Please subscribe to the podcast and make sure to leave a review. And we're going to, that tells us you appreciate the work we're doing, and we're going to create more and more content for you. So until the next episode, thanks for tuning in.